Rigetti is one of the better known quantum computing stocks and one that's gaining a lot of investor interest ever since October of 2024 when Alphabet made that great discovery, that great innovation with its Willow chip for quantum computing. Rigetti is scheduled to report quarterly financial results on March 11th, 2025. Now, this is a scheduled date. It's not certain. It's not from Rigetti itself. It's from a third-party source. Still, these are pretty accurate, and this source suggests that March 11th is the day they will announce quarterly results. And so investors are curious if they should buy Rigetti stock before the company announces earnings. I'll answer that question in this video by going through several of the important factors that investors should know about Rigetti Computing before making a decision to purchase, and then deciding whether or not they should purchase before the earnings announcement or after the earnings announcement. I'll discuss that as well. Let's get into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So you'll notice here in Rigetti's revenue history that you see a lot of choppiness and you don't see this pure upward trending growth, which is typically what you see in these newer companies, these more innovative companies that are just now starting to generate sales, that you just see a straight upward trend line with these companies because as they progress, they secure more sales. It's a growth business. That's not the case with Rigetti, and management talked about this in their latest earnings call, telling analysts that this is going to be the case. Their business is going to be choppy. They may sign a contract during one quarter, and that may make its revenue look good for the next few quarters, and then they might lose a different contract that doesn't get renewed, and so its revenue comes back down for the next 4 quarters. It's going to be choppy like that, and that's not the main indication of the company's success, which I agree with. Management said instead that investors should pay attention to the progress they're making on the research and development, on the innovation, on the levels that they're achieving in terms of their quantum computings, their qubit levels and their percentiles of error, etc. Those are the factors that investors should follow and look at them and see them making continuous progress, see if they can achieve something similar to what Alphabet achieved, which was a 99.7% level. Rigetti is at closer to 99.5% level. So long as they continue making progress on that front, the effectiveness of the applications can then be surfaced. That's the key there, the applications. Right now, their technology is mostly in research facilities at universities and government institutions. Their technology is not being used for enterprises in everyday applications. There haven't been any everyday application use cases developed just yet for quantum computing. That's the next big breakthrough. When you have that kind of breakthrough, that's when the revenue for these companies like Rigetti and other quantum computing stocks can soar, and they can go in the billions from just a few million in a relatively short amount of time as they ramp up manufacturing to meet the growing demand, if they do indeed find a use case for the technology, a commercial use case for the technology. So that's where all the focus should be right now, is in the development of the technology and how close are they getting for enterprise application, enterprise use cases. That's the evidence to look for when the company announces quarterly results. What did they progress on? What potential use cases did they find? What are the research institutions researching using this technology? What's the latest developments? Those are the kinds of things that are more important than the trailing 12-month revenues or the growth in revenues right now. So since revenue is not going to be something that's growing anytime soon, you want to watch how much money they're losing on the bottom line, because the people that they employ command very high salaries and they need those people to implement this technology. And so you want to see how much money they're going through versus how much progress they're making. And so operating margin negative 565%, and a cash flow from operations of negative 54.5 million over the trailing 12-month period. Or in other words, their cash burn rate is between $4 and $5 million a month. So I want to see how much money they have and how long of a runway they have before they run out of money and they need to go back to investors and ask for more money. So they have a cash balance of $20 million and they have debt of $13 million. So their cash balance based on their burn rate of between 4 and 5 million, they have about 5 months of runway. And I wouldn't be surprised if over the next few months they go back to investors and they raise more capital, especially if there's something in this earnings release that sends the stock price soaring. I wouldn't be surprised if Rigetti capitalizes on that opportunity and goes to investors and asks for more money. If they can secure enough capital to give themselves, 5 years of runway for this research and development, they can almost, I don't want to say guarantee success, but they can raise their probability of success to over 90% if they can give themselves 5 years of runway. And better yet, if they can give themselves 10 years of runway, they can get enough capital to have that kind of runway. Now, if you think that's impossible, I don't think that's the case. Remember in 2020, when everyone and their cousin was excited about electric vehicle stocks, and you had some of these EV companies, they were able to raise tens of billions of dollars from investors because investors got so excited about the industry. So they gave themselves many, many years of runway of capital and given themselves time to scale up and wait for demand in that market to reach the level that could generate sustainable business outcomes for these businesses. So you've seen a little bit of that with the quantum computing stocks, right? Rigetti's price action, it was up almost 2,000% at one point when in the days and the weeks following Alphabet's announcement of the Willow chip. Look at that share price increase, right? And so when there's moments like this, the company can capitalize, sell shares of stock, raise capital to give themselves that runway so that they can have enough time to develop the technology. All of these smart people working on a technology for 5, 6, 7 years, the likelihood of success just grows, right? The more time you have with all of the smart people working on, one specific goal, developing quantum computing technology, you increase your chances of success. So to answer the question more specifically about should you buy Rigetti stock before earnings, I don't see any reason to. This is a very high risk, high return situation. The stock price is already expensive. As you see, it's up a lot in the last year. So you're not getting this like undercover business. It's pretty well known uh, between investors in this category. So you might as well wait until the earnings come out, digest the results, let the price action adjust, and then buy the stock at a lower risk point because you're already taking so much risk with this investment. It's best to lower that risk as much as you can here, buying it after earnings. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.